Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points to move container markets and hence your business. Today it's Wednesday, so we typically take a look at key charts that move the week, so to speak, to give you an overview of what global markets, specifically container trading and leasing markets, are doing. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. I'm specifically not talking here about sort of macroeconomic indicators. Those we typically cover on Mondays, and there's quite a bit of movement there as well. Here we're looking at container prices, and first off, we'll start with our container price sentiment index. And what we do here is we concurrently ask industry professionals, be it traders or freight forwarders and VOCCs, of what their expectations are about container prices in the weeks to come. Out of the answers, either they expect prices to increase, they expect prices to decrease, or they expect prices to remain stable. We build an index where the zero line means that the market is neutral, neither expect significant increases nor decreases, and any value above the zero line means that the market is rather positive. And a value of 100 means that everybody in the market expects prices to increase. And what you see here is we've had some significant spikes and increases here in the past couple of months. Specifically in January this year, right after sort of the December crunch, the December start of the attacks by the Houthis in the Red Sea, we've seen container price sentiment spike at around 80 and then drop off slightly in the months after, and then sort of spike again after the market saw that there's no significant reduction in prices that realized. And now the index starts to drop again, but it's still in significant territory at around 40 points, which means that the market is still overwhelmingly positive when it comes to container prices. And now if we look at actual container price movements, this is now our Insights product trading price trends over the past 18 months, 44 high cube cargo worthy units in 4 locations, so Chicago and Houston in the US, Hamburg in Europe, and Shanghai in China. You see here that significant diversion that took place since about December last year, where the Shanghai prices have just soared to more than $3,000, while other key locations globally have remained rather flat. And now over the past couple of months, we see this changing a little bit. So Shanghai prices seem to have peaked at around 3,200. These are weekly averages. I know that there were also highs of 3,500 on the market, but these are weekly averages. So around about $3,200, that was the spike in Shanghai, and since that has sort of reduced and abated a little bit. And conversely, key locations, specifically Houston and also Hamburg, have started to increase and have started to pick up. And interestingly, if you look at the delta between trading prices and leasing rates, there seems to be a consensus in the market, also in actual price expectations, that prices will continue to increase, specifically in US locations like Houston. Why am I saying that? Here you see that the price difference between Shanghai and Houston is around about $1,500. So if you buy a container in Shanghai, you pay $1,500 more than what you get if you then sell it again in Houston. Now, if we compare that to the one-way leasing rates, and this is a different chart here in our Insights tool, this is exactly this: Shanghai to Houston one-way leasing rates. So what I, as a freight forwarder and VOCC box operator, what I have to pay to the equipment owner for that one-way use of the box. And at the moment, that value is around about 1,200, between 1,150 and 1,300. So somewhere around 1,200. And this is less than the actual price gap between the two locations. So me as a container owner, I lose about $1,500 in container market value just by moving the box from Shanghai to Houston, while at the same time, I only receive $1,200 back in pickup charge. And that $300 price gap is somewhere the expected price increase in Houston that I, as a trader, have to expect. Otherwise, that move doesn't make sense. Well, potentially, I have some better sales opportunities in Houston than the market, or I buy containers cheaper in Shanghai than the market price, then I'm better off anyways. but on average, this will hold true. And this sort of substantiates also a little bit our index sentiment. And I thought this was very interesting to share. Now, that's it from me, from us for today. Have a fantastic rest of the week and talk to you all on Friday. Take care.